Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX. This is today's European Session Outlook. We'll start with the North American markets, the most important event, the Fed interest rate decision. It was unchanged at 0.25%. The Fed thinks the US economy is doing okay, but the global economy is a different matter. And that's why the Fed held rates steady yesterday. If it were just a matter of looking at the US jobs and inflation data, the Fed probably would have raised interest rates even yesterday. But the Fed Chairwoman Janet Yellen made it clear in her press conference that the labor market is close to full employment and that she's reasonably confident that the inflation rate will drift back up to around 2% eventually. Now we'll be looking at the Shanghai market, the price of oil, the value of the dollar, and the stability of dozens of economies that will tell the Fed when it's safe to raise rates. We also had the initial and continuing jobless claims. Both come out better than expected at 11,000 and 23,000. Housing starts month on month, 44,000 worse than expected, Building permits month on month, 10,000 better than expected. And Philadelphia Fed Manufacturing Survey had a horrible result at negative 6%, which is 12 points worse than expected. Today, we'll be waiting for inflation data from Canada later on today. Yesterday's range on the USD Canadian dollar was 130 pips, so we can expect to see a volatile move today as well. The euro gained more than 1% to a 3-week high of 1.1441. Greeks will head to the polls for the third time this year on Sunday to elect a government that will lead the country as it implements the bailout deal that Prime Minister Alexis Tsipras' left-wing government signed in August. We also had the Swiss interest rate decision come out yesterday. It also came out with no change. And in the UK market, we had mixed retail sales data come out. The effect of the Fed decision was positive on the pound, with the GBP USD going up yesterday and continuing the trend today. In Asia and the Pacific markets, we had basically Glenn Stevens' speech was the most important factor. From Australia, resources sector exports have risen strongly as the greater capacity resulting from all the investment has been put to use. Australia now exports around 3 times the volume of iron ore that it did a decade ago and around twice as much coal. Outside the mining sector and parts of the economy most directly exposed to it, there are signs that conditions have been very gradually improving. This we can add that the overall number of job vacancies in the economy has been increasing, even as employment opportunities in mining and some other areas diminish. The increase has not been rapid, but nonetheless, the trend has clearly been upwards for about 2 years. Monetary policy is seeking to support this transition, something it can do because inflation remains low. Very low interest rates, coupled with financial institutions wanting to lend, have played a part in the improvement in conditions in some sectors. Stevens asked if this interest rate is appropriate to promote growth without running risks in the financial space, or should we hold or should we go down? We think we've got that balance right. I think we're pretty content where we are right now. This is what Glenn Stevens said from Australia. In commodities, we had the natural gas storage exchange, which in the week ended September 11th rose by 73 billion British thermal units, in line with expectations. Gold futures had ticked up to 1-week highs before closing slightly lower on Thursday. Ahead of the Fed decision, gold, which is not attached to interest rates or dividends, struggles to compete with high-yield bearing assets in rising rate environments. Gold jumped in Asia Friday, this morning, after a tepid start as the Federal Reserve kept its interest rate steady in the face of global economic volatility. Gold had a range of $20, trading at $11.29 now. Silver had a range of 46 cents at $15.09 now. Crude oil had $1.30 range at 46.57, and natural gas is trading at 2.62 at the moment with a range of 4 cents. All right, thank you everybody. This was today's European Session Outlook. I'll see you next week. Goodbye.